As of Monday's trade this week, we saw volumes dip again on the equity markets. In fact, the S&P 500 traded at volumes that were 17% below the 30-day average for the index. And that's an interesting element to look at when looking at technical analysis. It's also interesting to note that the S&P is in a rising trend at the moment. Does that mean that this is an unloved rally? Well, Bryan Noble joins us now from traderenable.com. Bryan, welcome.
Right, thank you.
We're going to be talking to you today about the S&P and the Dow in the context of, amongst other things, volume and volatility. Well, how are you trading these markets at the moment?
Yeah, I mean, it's been incredible. The whole year has been about the 200-day moving average. Once we broke on the downside, we sold off back in February. Everyone got excited about it, and we broke back above it, and it went back up again. And we've had 4 or 5 tests of the 200-day moving average in the last 6 weeks. The main one being last Thursday week when the S&P broke 2610, got down to a low of 2594 on the cash. Everyone got excited. This is the breakdown. We're going to go into doom and gloom. An hour later, the S&P was back trading at 2620 again, and we got up on yesterday to 2741, just buried anybody who was short. We had a temporary stop at the 50-day moving average, which came in at 2675. That's now at 2680, and we just went up again. So as long as we hold above the 50-day moving average at 2680, and obviously the 200-day moving average, which has now risen to 2620, this market is still a buy and dips. Yeah,
okay. The client spread at the moment is 55% short. That's the wrong call then.
Well, not so much. But the only thing interesting, just when this morning when I was doing my research for my commentary, the VIX, which is the volatility index, it actually gave a sell signal on the S&P. If you see it on your chart there, on the 17th of April was the last sell signal, and that was the first sell signal in 2 years. The S&P was trading at 2718. A week later, we fell 100 points, got down to 2610 before we had a brief rally. This morning, as you can see there on the chart last night, the S&P got below with a 12 handle on the VIX, is outside the bottom of the Bollinger Band. It rose back into it last night. That's technically a sell signal. If you look on the chart on the left hand side, going back to February when we exploded up to 3740 on the VIX, we were way outside the Bollinger Band. Once we came back in again, then we had this huge rally in the S&P. So it kind of works inverted to what the S&P is. So I'd be quite worried about this sell signal, because the last one was so good, and bearing in mind it's only the second one in 2 years that we've had.
Yeah, okay. So you are buying reluctantly buying this.
Reluctant, but because that's been the way all year. Anybody who's been short, if you don't take your profit over a few hours or for a couple of days, then the profit just evaporates. I think a lot of people got short on the break of that S&P and the Dow last Thursday week, and they really loaded into the short side. But we've had this. To me, it's a bear market rally. 2750 to 2800 is huge resistance in the S&P. Do I think we're going to get that high? I don't know. Bearing in mind we're also in the sell in May, go away. So markets tend to do the opposite of what everybody was looking at. Beginning of May, everyone was getting excited about the downside. But yet, if you go back to Trump, his popularity is the highest since Reagan. Love him or hate him, it's back up to 65%. He did get North Korea and South Korea together. He did get the 3 hostages released. Yeah. He is meeting Kim in Singapore. So the feel-good factor on the back of him and the markets is at an all-time high. And you can't really discount that, because I spent a lot of times in the States, and we might have a different view. As one guy said to me this morning, he's going to be nominated now for the Nobel Peace Prize, which is incredible. Turn around.
Let's talk about levels on the Dow as well. Currently trading at 24,800, I beg your pardon, 57% short. Similar story, presumably.
Yeah, we're just above the 50-day moving average, not as convincing as the S&P. I still think 25,000 to 25,500 is huge resistance in the Dow. It's going to take a lot to get back up above there. Also, it is a bear market rally, as we're seeing with the lower volume, as you say, with the volumes collapsing over the last few days, and that tends to happen. Anytime the market has rallied, the volumes have been actually on the lower side. The other thing we've got to worry is bond yields are back over over 3%
Yeah.
again. So, and it's interesting, 2 of the last 3 Tuesdays, not last Tuesday, but the previous 2 Tuesdays, the Dow fell between 500 and 600 points in an hour. So I also have that at the back of my mind for we're coming into a Tuesday with the sell signal that's been generated in the VIX. So, I wouldn't be getting too excited about buying the markets here. We've had, the Dow's rallied 1,500 points off that low last Thursday week, which is a phenomenal move. So I would be, tending to be, on the downside, you really need to break sort of 24,500. I'd be a buyer against that level today if we do sell off. But if we close back below 24,500, then we could have a good run lower again. But the real level to watch is kind of back down to the 23,600, which we briefly broke last Thursday week before we had this massive rally.
Yeah. Talk about euro dollar. I think you're long euros, aren't you?
Yeah, I'm long. The euro dollar is interesting. The dollar has risen 5% since the end of February. Huge move higher. Euro was trading in April at 124, and here we are trading at 118.80 today. One indicator that I watch a lot is the daily sentiment indicator. It gives the sentiment of what traders are at. Last Friday, the DSI closed at just 7% bulls for the euro. It's a really, really good indicator. We saw a nice move in the euro back up to just shy of 120 on the back of that reading, but obviously the dollar has surged again this morning. I think the higher bond yields are certainly and the higher oil price are certainly helping that. But I think as long as the euro can hold over the 118.20 area, I still think the euro is a buying dip. So it's actually you can buy the euro with a cheap stop as opposed to having a big move. I was very bearish in that euro when we were up at 123, but the fact that we had such a big move so quickly, I would just wary.
So you'd buy this right the way up until what? Up to these levels up here? I mean,
well,
that is 123.60.
Yeah, if the euro can close over 119.90, that's a buy signal. But I'd be a small buyer here with a stop just below 118.20. I think it's good risk reward.
Yeah.
But again, I wouldn't be holding around. If you can get your 40 or 50 points, you take it. That's what all these markets are. These are not markets for holding views for a week or 2 weeks, because there's when you've got a president who tweets so many times a day, he can turn a market around very quickly. So you have to take your profit, and that's the whole idea of my blog, is you take your profit when you see it.
Yeah, got to talk about gold as well, because gold fits in neatly with the geopolitical scene at the moment, and the fact that things can turn on a dime. And you're short gold, is that right at these levels? Just over 1,300.
Yeah, gold has. We've had 5 attempts at the 200-day moving average, which comes in at 1303. Each time gold has bounced off it. The high was 1366 back in April. So we've had a good move down. I think your clients, just looking at the IG clients, they're 85% long gold, which is incredible. Everybody that I speak to is long gold. So I think it's only a matter of time before we break this 1303. Now, I don't think we're going to get a huge dramatic move lower. I think we might go down to 1250, 1275, because I don't think the geopolitical situation is going to go away. Look what happened with the Gaza yesterday. So I think gold, but it's in the price. I think as it's, showing 85% of your client base being long gold, if that's replicated everywhere else, a lot of the bad news is in the market.
Yeah. Okay. All right. Bryan, thanks so much indeed for joining us. Bryan Noble from tradernoble.com. You can catch up with Bryan's thoughts on his website.